Mm.
I know people hear this, and I'm not sure if everyone knows what it is, but how would it affect, one's ability to buy a home in Ontario? Like,
Okay.
how would the stress test?
Yeah.
Yeah.
Yeah. So in 2016, something that was introduced was a 2% extra that you have to qualify for, right? So you have what's called a posted rate, which is what a bank offers you, and that's what your payments are based on. But in order to qualify for that rate that the bank offers you, you initially have to qualify at the bank rate plus 2%, which is the mortgage qualifying rate. And that's what they call a stress test. Initially, it was designed so that if whatever rate that you're operating right now, if the market swings 2% up, you can still afford it. Now, we know from our experience it's gone way beyond that 2%, right? But the initial goal was so that if there's a payment shock or if there's something happening in the market that banks have to raise your rates, if you're on a variable rate, um, or vice versa, if you're on a fixed rate, you first have to qualify on 2%. Now, the lower you start off, the lower posted rate that you start off, that 2% qualifying, it becomes better. So in terms of if you're buying a home and you're looking to maximize your purchase power or get the highest mortgage amount, you're probably better off sticking to a fixed rate than variable, which means that if a Bank of Canada is reducing rates, it becomes irrelevant for you because you're operating in the fixed rate market, right? So that 2% really does factor in how much you can afford. And if you can start off at a lower rate, you can qualify for a higher mortgage, right? So that's what you should be focused on.